Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today, out of all of the markets, even though they were all a little bit kind of crazy and gross to start the day off, crude is about the most interesting I think that you can get your hands on. So first of all, we started the day off looking back at yesterday thinking, man, look at this big old gap down. They had nice continuation. That first candle of the day was the high of day. That's usually a very bearish indicator. And now we're opening up after that big drop lower with the buyers failing to get going. Now, very frequently at the end of a move, when you have a big drop like that, most of the time that's kind of a sign that the end of the move is near. Now, it depends on what the follow through is, right? If we slam lower, but then we pin to the downside and then continue, obviously that's still bearish. But if we slam lower and then fail to go down again and turn up, that's a big sign of reversal. In this case, the buyers failed, right? Look at the first candle of the day, and then the follow through, abysmal. All of the wick on the highs, and then when they finally had a chance, they poked their head above the high and dropped right back down. Now, what gets even more interesting is if we start using what we call candle math, right? Adding the candles together, what do we get? Well, the first hour of trade, we opened up here, right? We opened up there. The first hour of trade, 9 o'clock to 10 o'clock, we add those all up and say, well, if we opened here and we continued to 10 o'clock, what do we have? Well, look at the time frame at the bottom. This is 10 o'clock, this line right here, and the open is right here. So we opened here and we closed where? Well, we closed right there. Right about there, which means that this is the body of the hourly candle and the wick is like this. Right? So the first hour of trade, this is what that candle looks like. Now, does that look pretty bullish to you or does that look pretty bearish to you, right? That's a very bearish indication. That's a heavy, heavy bear candle. So when the buyers failed to take it higher right there and the sellers slammed it back to the downside, that offered up the sellers, albeit a little aggressive. This is a massive candle, but it allowed the sellers to attempt to drive the market down into major objectives below. Now, for the sellers who maybe didn't want to take that one, right? Maybe they hesitated a little bit because of the risk being, needing to be so large and the fact that it couldn't close under yesterday's low. The buyers tried coming in again. Their follow through was a doji and the sellers swarmed back in. That is a big clue that the sellers own this market and they are looking to take it lower. Now, along with that, when the buyers tried coming in, notice what happened. Huge amount of inventory formation on that bull move. The buyers tried popping higher, going against this big bear breakout, and then completely failed. Now, if you're not a big fan of selling into bull candles, although a lot of sellers will have in this case, the follow through, beautiful little inside bar to trigger it off, that's going to offer up a lot of incentive for the sellers to jump in. Now, why is an inside bar important? Well, in this case, an inside bar is nice because what that allows you to do is sell underneath it or sell the close of it or whatever your preference is, and it allows you to put your stop just above those highs. It reduces your risk. Normally, if you were going to be selling into this move, let's say you sold that bull candle, your stop logically has to be either here or here. That's a lot of risk. But when you wait for the market to give you a little more information, it allows you to get in at a good price, still the same place, worse than here, you got to pay for it, right? But it allows you to reduce your stop size, and that's why that follow through was so aggressive, because everybody who's been waiting to get in but didn't want to risk that much, that's where they jumped in at, and it allowed that big drop all the way through the bottom, almost pushing into the monthly support level of 5110. So just a great day in terms of psychology. A little bit tough for the entire morning session. Notice where all of the chop and slop happened. It was the first, hour and a half, arguably even a little bit longer. So the first little bit of the morning session was really gross, but when it finally started opening up, that allowed a decent amount of trading opportunities. So that's going to do it for this one. Hopefully you found it useful. Hopefully you found some information that you can use going forward into tomorrow's price action. Again, learning from today to use for tomorrow. If you have any questions about it, feel free to send me an email, jbrink@slingshotfutures.com, and we will see you all tomorrow.